What's happening, everybody? Welcome back to the final hour. It is Tuesday, March 11th. Let's go ahead and dive in. Certainly today feels a lot better than yesterday. Correction only. Well, the S&P pretty much hit 10% right on the nose, and we've had a nice little rally off of the lows. So we had a bottom today right around 1:25 to 1:30 p.m. Eastern time. SPX off those lows up just over I guess just shy of 100 points off the lows. Qs have ripped up about 2.5% off the lows. So is the correction the game? Is that the play? Buy the dip? Is it more to come? Let's discuss. So trades that I have running for today, I have a 5530 broken wing butterfly pin price. And that is going to offset a 5500 butterfly spread, which is a 55-cent debit. This was a $1.20 credit. So at the end of the day, if price stays where it is, then I'll walk away with 65 cents between the two for profit, which I will take. That is fine. If something happens, I mean, I'd say it's unlikely we're coming back down to the lows of the day. I think this market has had some realistic pain, and it's been felt for the last couple of weeks. This would now mark 1, 2, 3, 4 weeks of selling, with Monday being a very big flush down. We had a big gap to the downside. We had historic levels of puts. We are seeing credit spreads widen a little bit, so I do want to talk about that. But SPX high to low was right on the point, 10.05% from high to low. So it's probably not by accident. I think there's some interest here. We're still not breaking any substantial trend lines, right? So, I mean, if we're going to come back up into this area, I've said this, watch the trend line resistance area around 50. In this case, it's about 57.50. If we can break this area about 5,800, I would be kind of cautiously bullish into this area, probably doing some de-risking, de-leveraging, obviously recovering some profits quite nicely, but also dumping some positions that would be potentially in trouble or causing me any type of trouble. So this little rally here on, let's see here, profit. No way. Did we hit 98.80? Holy Toledo. We're not there yet. Getting a couple more positions filled on my Euro Swiss. 1, 2, 3, 4, 5, 6, 7 positions. That was a nice little pullback. Okay, very good, very good. Yeah, got a long position running here. 1, 2, 3, 4, 5, 6, 7, 8, 9 positions going after 98.80. I'd like to see this thing all the way up towards parity, but I'll be somewhat conservative. This level's fine. Right in here towards the highs. I may move this up just a bit, but again, not being greedy with 9 or 10 positions running on this account. I've got 30 positions running on my other accounts for TastyFX. So we'll see. Okay, back to the markets. Look at the day's candle. I think we can start to put in a bit of a bottom here. We're just below the 200 moving average. If we see price, moving nicely off the lows, we start to chew into yesterday's candle. Is it possible that we actually make this week's candle bullish? Possibly, right? I mean, is it possible the long wick to the south will stay there? We end up pushing like a green body to the north. If that is the case, I think a Fibonacci swing from high to low might be a really simple way to look at a near-term correction. So right in here, we'll see where the bears step back in. So a couple levels to be mindful of. The 30% pullback zone and the 38% pullback zone. If we can get above this, this is going to be a really nice tell for the markets. So S&P, if we are sitting around 5,700, so 5,700 rejection or a 57.65 rejection, because if neither of those materialize, then we are probably pulling back into this halfway mark, which is around 58.30. The 618 is kind of that fancy golden ratio. That's 59.10. So I think we're going to a 5,800 to 5,900, 58 to 5,900 pullback area. And that's the fight. That's where the bulls and bears are going to duke it out, is somewhere back in here, 58 to 5,900. All right. So what I'm going to look for here in the near term would be something like so. Trend line hasn't broken yet, but I'm looking to see, is this low going to hold? Is this a low to high, a pause, and another push? Tomorrow's data in the morning at 8:30 with CPI news. Is it going to give the market another leg higher? Is this 10%, just the correction, and the market's laying in, kind of leaning into a dip in correction and trying to get a little relief rally? So we'll see how this week continues to play out. I posted a video on my Telegram channel here, and I just wanted to update this. This is at 1:38 p.m. Eastern time, so this is right around today's low. And I'll summarize this. I just said I'm bullish. In the short term, I'm bullish. So positions I took to reflect that. I posted a trade in my double up service. We posted some bonus trades in my daily profit play. And also we talked about it in my live sessions this morning. So what I'm looking for is exactly that. I'm just looking for a little bit of a rally to the 58 to 5,900 area. What I'm going to watch for price action in here is to see that we are continuing to go higher highs and higher lows, or some type of bull flag position. We have a gap fill situation right here, which would be around 57.60. So I think if we're above this low, or if we fill this gap, I think if we fill this gap, that's a pretty good sign. Now, obviously I'm not ignoring the resistance. I don't think this market is going to go in without a fight. The bulls aren't just cave, or the bears aren't just going to cave and roll over. But a correction is pretty there. I mean, like 10% is like spot on correction. And, it's, I said in my Telegram video, it's like, look, this tariff situation that we continue to see, and the market's trying to price in all this uncertainty. What's crazy about this is it's all self-inflicted. Like, we don't have to do tariffs. And I get it. Like, you can argue like, oh, we have, the U.S. has such bad trade deals. Okay, well, the tariffs that were put in place in 2016 were actually kept through most of the Biden administration. So all it is just front and center headlines, and it's self-inflicted. And if Trump wants to sacrifice approval ratings and sacrifice what I thought were going to be some pretty reasonable guardrails, where his approval rating and his narrative and his commentary, and every time he's in the freaking calendars for news events and tweets and whatever, if he wants to crash the market, nobody's going to like this. A correction is fine. Like, this correction territory is totally fine. It's understandable. It's been needed for a while. I mean, we were in overbought conditions, okay? But we flipped around to now oversold conditions in the near term. And even if we go back to a move here, this market sells off, pulls back, sells off again. That was about a 9% correction right there. Okay, this market sells off, pulls back, sells off. That was about a 5% correction, right? So this is right at about a 10% correction, and we really didn't have much of a bounce, right? This was just down, noise, down. So if we get a bounce, that's what I'm looking at here in the near term. And if you go back to any slide we've seen in the market of any substance over not just, a 1 month window, but go back to this correction we had in August, September 2023, we were down and then up, and then we were down and then up, and then we were down again. And that was a correction, and the market came out of that. You go back to a legitimate bear market in 2022, the market is down and up and down and up and down and up and down and up and down and up until it finally carves out the lows. Now, nobody knows where these lows are at, but my point is these flushes are oftentimes met with the market bouncing and going both ways. So unless we have, I don't think that this current environment is going to be like straight up collapse, recession, everything is going down, the markets are imploding. I don't think that's the environment that we're in. So the optimism and resiliency work a couple of ways. Right now, if the chatter quiets down around tariffs, so be it. This will certainly help the current slide. All this uncertainty will help the current slide. We'll start to get a relief rally. The Fed is still going to make some comments next week on Wednesday. They are likely going to maintain this pause for next week. 97% probability the Fed does nothing next month or the next week. And going out to the remainder of the year, May looks like a pause again. June would be the highest probability first rate cut. June, September, or June, July, and September, or June, July, September, one of those two, and a October, December. Either way, this is on the calendar for roughly 3 cuts this year. If the Fed is sensing that things are really slowing down, the Fed can still cut They can cut more rates. They can cut 3 times this year. So either this is a bear market that's about to happen, meaning we go up for a little risk on rally, and then this market flushes down. And look, if we take out these lows, then I am genuinely more concerned about where this market is heading for the rest of the year. Right? Levels I'd be watching for would be watch this August low and watch this watch this previous resistance at all-time highs, and also this is a 5-period yearly average. That is 20+% correction territory. I would want to make sure I have cash at the ready to buy in there, but that would be okay. If we're not making new highs for the year, then I've got to be prepared for this market to not be great. And at the same time, historically speaking, when you've had 20+%, okay, in 2023, which we did, 20+% in 2024, which we did, the following year tends to be a 10%. So, I mean, if the market's going to get to all-time highs this year or get back to green this year, then we started out right around this 6,000 handle, right? If we go to the beginning of the year, let's just go to the, where's the 12-month candle? So we started out at the close, the open. Let's see what this thing opened. We opened around 59.03. 59.03. We were as high as 61.46. Currently as low as around 55. This is just one yearly candle. So anyway, something to pay attention to. Okay. So in the near term, I'm putting on some option trades, looking for a short-term rally. I'm trading these out to the 21st and the 28th. I'm trading this into April. One of my services, Waterfall Income, we have some lines in the sand that has been tested. If my XSP can stay 560 or higher, we've got some nice looking credits. If we stay 560, 550, 545, 530, it looks pretty good. I'm looking for a little 585 to 600 relief window. All right. And again, there's my fib from yesterday that I drew during the final hour. Same type of thing. Here's a 30% pullback level. Here's a 382. Here's a 50. If we see price getting above, the 30%, I think we can track to the 38. We get above the 38, we've got a probability we just work our way back into the halfway point. That 50% pullback zone comes right in line with this structure right in here. I see that as a spot where if you get yourself out of trouble, that's a great spot to get out of trouble, right? This is where the bulls and the bears can step up and fight each other because we will have a little bit of a relief rally. If this is a swing, which did take out previous structure lows, then yeah, we might have another attempt to flush these levels. Right? Maybe we're sideways here. I would still be concerned there could be another leg lower. I am concerned there's another leg lower, but I want to be able to position for that. So in the near term, I'm looking for this trade, 580 or so on the SPY, 580 or so on XSP, around that 58 to 5900 handle on SPX. Anything surprising to the upside would be bonus, in my opinion. But trying to get an opportunity to relieve some pressure, get out of some terrible exposure, which I don't have a ton of it. A lot of my stuff is like defined risk options, but Tesla is at 232. I have a trade to next week where it is a 255. I have not been assigned yet, and I'm not necessarily wanting to keep assignment, but if I have to, I will, and that's okay. But if I can keep the prices pushing up, I've got a chart alarm set right here at 255 to get out of this trade, but for next Friday. If we have another little rally to the upside, anything greater than 255, I'll probably start trimming this one out. And then these, I'm okay just leaving alone for April and May. If this market's going to rally at all, I mean, Tesla after a 50+% correction, down 55.5% in what? In about 3 months. That's an impressive slide, considering how much love. I think the markets were thinking Tesla was going to be ripping up towards $500-$600, but wow, that quickly dissolved. So all right, let me grab some questions here. Pound yen. Pound yen's probably my least favorite yen pair right now. I think there are better yen pairs when you're coming back to support near this August bottom. Aussie yen looks like this. CAD yen looks like this. Euro yen actually bounced off the lows because the euro's been really strong. New Zealand yen looks like this. So if we have confirmation to see some bullishness off those other yen crosses, I like those pairs better. Pound yen, I just don't like where it's at. I think pound yen is we have some intermediate support. We could have some chop in here. It could just be back and forth for a little bit. If it breaks and goes higher, then there's resistance ahead. But I don't like the structure. I'd rather be looking to line something up where we can sell. I mean, if we can sell up here, I'd rather sell the pound yen higher if possible, or we get a break to the downside. I'd rather sell it, going into these lows. But I'm just not sure about the direction right now, so I don't love it. What else? XSP trades going, they're fine. Like I said, lines in the sand, 560, 550, those trades are fine. I'm still sitting on a bit of a drawdown for them. So XSP right now it's down about $2,700, which is okay. But I'm also staring at about $1,000 in credit if we just stay above the levels I want to stay above at. So this one is that's a credit spread. There is my 550 level. There's my 550 level. There's my 560 level. Here's a 559 level. There's a 560. There's a 540. There's a 545. This one is a bull put spread 560. This one's a 567 level and a 535. So I'm watching, but more pressing would be the expirations for end of the month. So the 28th and 31st. If we're above 550 and above 550 by the end of the month, which right now we're still trading at 561. So if we put in an intermediate bottom, these XSP trades are going to be just fine. Right. So, I'm down a little bit. This one is down. This shows a $600 loss pending. Right. But it's not fulfilled. I was willing to take on the true risk on this trade for me is this is a $2,000 risk on this trade. This is a $2,000 risk. And I do have about $1.53 on this one and $1.48 on this one. So of a max loss there for $2,000, I would subtract about $300. And that would be we'd have to drop another 10 points, which would be another 1.5% to 2%. We'd have to take out these lows and stay there for the rest of the month. So if there's any relief rally and this 10% correction is timing, I'm hoping by the end of March, we just stay above these levels, 550 and 550. Through April, there's a 560. So I'll be watching that one pretty carefully. That's actually right around current price. So if we're going up from here, then that one looks fine as well. So we're going to keep a close eye on these over the next 17 to 24 days for waterfall income, and then I'll just keep an eye on those positions. So other trades, SPX, trades running for today. This is the butterfly spread that is going to be a loss most likely at $50. This is my broke wing butterfly that's going to be likely a profit for $120, and that should net out to be a 65-cent win on top of the trade we took earlier with daily profit play, which is a 50-cent winner. Waterfall, this one's still out to the end of the month, 55.10, 54.70. We're trading at 56.05, so still another 100 points there for putting in an intermediate bottom. I'll keep a close eye on that one for a winner. I did take a bonus profit on that one, which is why it's just looking at a 40 wide credit spread. This one's a 25 wide credit spread, and I'll keep watching that one as well. And then this trade for SPX is a Iron Condor, and I'm keeping an eye on this one as well. So this one is upside down about $170. So all in all, I'm still watching. I mean, there's lots to navigate, lots to monitor. XSP is doing fine. GDP revised from 3.1 to negative 1.8. I know, but that's also typically an overshot. Those change every 2 to 4 weeks. So if we see I don't know, if we see the GDP revision, if we see something where the Atlanta Fed changes that, we'll find out. I don't know where that exact print is, but let me see if I can go Atlanta Fed GDP. Maybe it's this one, GDP now. See if this is the link. Come on, browser. All right. Well, come back to that. There we go. Must be with all the Doge cuts. The Fed website is slow. Just kidding. Spending cuts won't weaken the U.S. economy. They will strengthen it. Okay, fine. I mean, a lot of it's needed, right? We're trading at like a 25, 26 multiple on earnings. I think that earnings were a little bit overstated And I think we're going to have a bit of an earnings compression moving forward. So, look, I get it. Like, there was a need for technical correction. We're getting it. I think this market, as we typically see, moves in waves. So a 10% correction is met with maybe a 4, 5, 6% rally. If this is a dead cat bounce and we're going to make some fresh lows, I will do everything I can to mitigate some of the risk right there. If we have a surprise to the upside, that's easy. But I want to make sure that any legs lower, I am either properly hedged and I'm eliminating positions and I'm getting rid of some of the outside exposure that I don't necessarily want or need. Okay, do I trade NQ? Yep, I trade NQ and MNQ. That I do. Here's an estimate for 2025 Q1. Just give me a website, would you? This is what I saw. GDP Now. So this is the revision. Blue chip consensus, Atlanta Fed GDP Now estimate. I mean, I don't know if they pressed the wrong button or what, but that just seems like, oh my gosh. So from a 2% GDP down to a negative 2.8, or now it's back up here. I mean, I don't know if this thing goes on every day. If this data point's March 6th, that would have been last week. So I guess I'll just save this as a favorite and go GDP. This is Atlanta Fed. Okay, I mean, this made headlines this week, so we'll see what it ends up resulting in. Same thing. All right, I'll save this as well. So Atlanta Fed live link. All right, so keep an eye on that one. Aussie crosses. Somebody was asking for Aussie crosses. Pound Swiss looks very bullish. I'm bullish on all the Swiss pairs except for Swiss yen. That one I'm not. I'm already out of that trade for a profit. So Aussie Swiss, CAD Swiss, Euro Swiss. Euro Swiss actually is looking pretty good. I checked that one just a little bit ago. Had a order fill with a buy stop just above these highs. I was a 96.30, 96.25 fill. Now I've got a 96.75, 9700. I'm stacking up a few more orders towards my 98.80 target. I'm still in, and I still like the Swiss crosses. So I like Aussie Swiss. CAD Swiss is certainly not fun, but a good spot to be long. I'd say, in fact, a great spot to be long. So I'm still maintaining. I did get a buy in here right at these lows around 60.75, and I'm looking to see if I can take it back up to center highs. Okay, Euro Swiss looking pretty good. Hopefully, we're talking profit targets here towards 9,900. Pound Swiss. Pound Swiss is looking better. Euro Swiss is certainly looking better, but the Pound Swiss has been pretty resilient. We're not anywhere near these lows around 108. I'd love to see the Pound Swiss up to the 116, 117 area, but I'm trying to hold on to this a little bit longer towards this like 119 window, somewhere in here. So I'm going to hold on to my Pound Swiss positions long for that upside. New Zealand Swiss, another one that's a good spot to be adding. So it's slow. You got to be committed to it, but a small position here can go a long ways, getting back to recent highs around 5,400. So I would just look at this. There's a swing, and I mean that right there is a good profit target. If you want to be conservative, take a profit around 5,320, 5,300. That's a pretty good profit target. If this is going to set up some type of double bottom, then I would take this move and double it, and we would be heading up towards the 50, let's say 5,700 position. So I'm just going to stack these up as this is target 1 around 5,300, target 2 around 5,700. But you got to be willing to hang into this trade for a while. If you don't want to get in too early, I typically like to get in kind of early and small and just test the levels a couple times. And then once I have better confirmation, then I'll start adding more positions and stacking up some buy stops over here and hit my target 1, take some profit, and then let a remainder run towards a target 2. I can stack up trades the entire time. So if I see a bullish pattern, I'm certainly a lot more willing to add to my positions. Okay, NVIDIA buy. I don't know. The Mag 7 can certainly come back a little bit. I would be really careful because, look, they were rotated out of for a reason. I think that this market is needed to broaden. It's really important that the market broadens. Okay, this RSP back down to equal lows. We've had a correction on this one as well. I don't think it's been quite as bad as the SPY. Let me go to my measured move here. So from highs to recent lows, 9% on the RSP versus 10% on the SPY. So I mean, it's about the same. It's not a picnic. It's we saw in the bear market of 2022, RSP was down about 25% and SPY was down about 26%. Q's down about 36% or 37%, and the QQQE equal weighted down about 36%. Like literally, they're pretty much the same. But they still perform pretty well. This one has been argued to be a bit more resilient, but I don't know. I'm still kind of dollar cost averaging into them, taking a couple steps. Am I still bullish on UNG? Yes, I'm still holding UNG. If it gets above $23, then I'm out of the trade with a diagonal spread. My $23 sell call is going to get exercised. So what I'll be doing is probably exercising that along with my $5 long call and take that for 18 bucks. So the trade is $11.25 debit. If I close it out for $18, I make $6.75 per contract. The other trade I'm still long in is TLT. We're trading around $90. I'm going to be maintaining this kind of long bond position for the next 6 months to 12 months. And right now my break even is price point around 86.17. I rolled out to a $92 sell call position into April. So if we're coming back to revisit recent highs, I'll let this get called away as well. That would be a $27 position. So I rolled it up to 92. So 65 to 92 is $27. And my debit is a 21.17. So about $5.83 on all my contracts for TLT. So I'll set a chart alarm here. See if we get to recent highs. And my UNG position also poked the recent highs around 23. I'll see if we make a fresh high here as well. Because if it keeps making fresh highs, then I'll roll my sell call out a little bit further. If I can roll this out to May and I can keep it at 23 or maybe roll it up to 23.50 or 24 and not pay for it, then I can roll it out and up and lower this debit and also take on a bit more profit. Okay, NVIDIA at 110. I'm going to set a chart alarm here at 115. So this is my buy put ratio spread. So right now in NVIDIA, the options have changed pretty quickly, but let me show you the trade here. So I just have a buy put at 115 and a sell put times 2 at 110. And right now I'm down about $254. This trade is out to the monthly of April. So the way this trade works is I pulled in $2.26 credit. If price is greater than, if price is greater than 110, then I keep my $2.26. If it is greater than 110 and 115, I just keep the $2.26. But if it's trading at 111, I will get $3.26 because I'll have a, actually, no, take that back. Let me go this the other way. If it's trading at 114, I get, that's an extra dollar, so I get $3.26. If it's trading at 113, I get $4.26. If it's at 112, I get $5.26. If it's at 111, that's supposed to be a 1, sorry. So I'll delete that. 111, $6.26. And if it's at 110 spot on, which is not going to be easy, but that would be a bonus of $500 and be $7.26. So it's okay since we are putting in at least what looks to be an intermediate low. So we'll see what price does. I still don't love Mag 7 right now, but I think that at least having a bit of a relief rally. I mean, NVIDIA was down like 20+%. Tesla's down 50+%. Let's get out of here, Chrome. NVIDIA was down from the all-time highs around 31.5%. I mean, it didn't disappoint on earnings. It's just the law of large numbers where it's harder to make, leaps and bounds exponential growth. But a relief rally into this 115 to kind of 120 zone, I could see that happening in the near term. Right? Do I want to be bullish on NVIDIA? Not really. Do I think we're coming back to 140, 150? Not without the entire market going with it. I don't think Mag 7 getting back to highs without the whole market. I don't think the market itself is getting back to all-time highs without having Mag 7 go with it. So if this market is still about like dumping Mag 7, rotating into more defensive sectors, bracing for recession, then all we would maybe have is a chance to get out of some trouble. But I don't see NVIDIA being like crazy bearish, you know? I mean, if NVIDIA comes down into, $100, $95, $90, okay. I mean, I'm willing to hang into it a little bit longer. I mean, the premiums are still pretty reasonable. If I own some shares, which I do, I've got a collar trade running on it right now. If I own some shares, I'm going to get them called away around 125 or 130. And then I've got my ratio spread with the 115 by 110. If it stays above 110, I make money on the trade, and it's a bonus trap inside that. So we'll see. But a near-term buy, I mean, if you go from like a 110 to 120, I could see that as a very safe short-term trade. But I wouldn't necessarily go too much higher than like this kind of 125, 130 support. All of this structure back in here around that 130 handle, that to me is about the short-term rally. This is where the bulls and bears are going to have to figure out where to go. Make sense? All right. What else we have? Apple tested the recent lows, stabbed at them, but showing some indecision. Amazon actually green on the day. AVGO positive earnings, holding some green. This one's okay. I'm not really playing I did do a trade on SMH. This 195 by 194. I did a bear put spread, and is that trade done? Let me see here. SMH. So a 195, 194 by 160. There it is. So here's an example of that. I pulled in $3 credit on SMH. I bought the 195 put, sold the 194, and then I'm doing a cash secured put at 160. Right now, that's trading at $16 in the hole, so it's about break even. I collected $1 on that trade. I said $3, but that was a mix up. So $1 on the trade for income. Would I own SMH? And my answer was yes. I mean, I would own it at 160. Okay, so this trade is my bear put spread. This is my cash secured put. And so if we're trading above this, I keep my $1. If we're trading, at this, I might be able to grab a profit trap. If we trade below this, that is a $2.01 winner. And if we're down below this level, then I take the assignment and I own it around 154. If I own this at 154, I don't think it's a terrible trade. Own this thing around 154, that would be a 45% discount on SMH, which is supposed to be the future. So maybe this is really painful. We'll see what NVIDIA does. But the reality is, if NVIDIA shows resiliency, if NVIDIA is up in the near term, this will be up in the near term. NVIDIA is, I don't know what it's weighted now, but it's about 18 or 19% of SMH is NVIDIA. And then you sprinkle in your infrastructure and other AI positions and semiconductors. Okay, SMR. Is it an actual stock? Is it this one? New Scale Power Corp, or you got something else for SMR stocks? I don't know. I don't have a lot of history to go on here. This goes back to 2020. If this is the stock, I don't really have anything on it. Okay, what else for Mag 7? We also have the 30-year mortgage rate that's going to be updated tomorrow at 7 a.m. Eastern time. We have CPI data at 8:30 p.m. or 8:30 a.m. Eastern time. 10-year yield is up to 4.27. I'm guessing the mortgages are going to be somewhere between like 6.4 and 6.6% tomorrow. This was around 605. This is around 705. So somewhere in between with about a halfway point, maybe somewhere in there. Not bad. Sectors. Oh, well, then why don't you trade sectors like XL what? So SMR. I don't know. You got to give me a better signal. OKLO. Looks like a dumpster fire. I mean, I'm not touching this stuff. There's no history to go on. All I can do is look at this fundamentally and say whether it's good or bad. So if you want to trade sectors, the only sector I really like right now would be if the Fed starts cutting. Here's year to date right now. So Healthcare is still probably one of my favorite sectors as far as, and I don't love this. I don't love this at all. The only trade I really have exposed to healthcare would be Pfizer on a peripheral because it's a decent dividend and it's low beta. So I own some shares of Pfizer. I did a diagonal spread out to 2027. I bought a deep in the money call. Let me go to my Pfizer trade right here. And then I also have some cash secured puts on Johnson & Johnson. So J&J and Pfizer. So J&J and PFE are my two like kind of healthcare plays. I'm in insurance with CB and PGR. That's Progressive and Chubb. Tech, I'm out of. Utilities, maybe. Utilities is pretty full of dividend plays. XLU, sector-wise, I mean, the dividend itself offers a 2.87% yield. I like this, but if we're going to see more corrections, I don't love it. I would look something like that type of correction, maybe this type of larger channel. And, if you're holding here, you could have some resiliency in XLU, but that's about as good as I can see it performing right now. If the market's not going up, this sector's not going higher. It might stay the same with a resiliency level. It might be, I don't know. I think it's, look, if the market is down, it's really simple. If the S&P is down, that is the broad-based market for the U.S. There is little to nowhere to hide, unless you are trading an inverse ETF that is, long, a short. It's basically long an inverse ETF to be short the SPY. That's about the only thing that'll perform well because your broader basket, if the S&P is down, okay, and the Nasdaq's going with it, and the Dow's going with it, and the Russell's going with it, there's not a lot of places to hide. You can hide out in bonds. You can hide out in currencies. You can trade futures. You can trade options. You can trade these movements. But overall, the direction and the flow, no sector is safe if the broader market is down. So right now, it's like, where's money hiding out? Well, they're going to hide out in lower beta. They're going to hide out in more defensive plays. They're going to hide out in dividend plays. They're going to hide out in something that's not going to be as exposed to a Mag 7 decline, as exposed to maybe the AI volatility that we're seeing right now with tech selling off as it is, Mag 7 selling off as it is. So money is just going to be put to work with maybe some blue chip trades. One trade that's not a bad one is, or we're continuing to make higher highs in MO. And this is another play that I think is pretty solid. If you're owning shares, this one has a strong and reliable dividend, about 7%. I mean, that's, in my opinion, that's a stock that probably looks okay to price appreciation. And a 7% dividend, it does come with volatility, but it is better than a 4 to 4.5% treasury. So this is not a bad play. So anyway, I cut a lot of my MO exposure. I do have some of it because I've got some covered calls at 52.50. So I still have 1,800 shares with some June covered calls. But I bought this at like $39 and I let it go at $50 and $52. So I'm still up about 22 grand in this, and I'm going to let this one just go to full profit. That 52.50 call. I mean, I could still roll it if I want to, if it's worth it. Otherwise, it's a low premium stock. SoFi, I'm just seeing that request come in the chat. SoFi is back to $11. I think SoFi gets better when rates get cut. This is servicing business. This is servicing student loans. This is servicing any type of refi. And right now with rates at 4.25, 4.5, we probably need to see 2 or 3 rate cuts. If things get dire enough, I'd like to see SoFi back into like the $8, $6 zone. I don't want it to be there necessarily, but if it is there, I think this is a pretty good spot to say I'll take a stab at it. If we go from a $6 or $8 position back up to say $16, I would love that trade. I mean, heck, even if we go from $6 to $12, 100% position, it's still risk capital. I don't know why the stock's not more expensive. We had recent highs up here at $24. I think we can still get there. But until we start to see rate cuts, I don't think SoFi really has a good runway ahead. And SoFi on this chart, oops. SoFi, come on. Let's go RKT. Okay, I guess it doesn't want to open up. There we go. SoFi. So earnings forecast to grow at 19.54%. That's good. Became profitable this year. That's good. High level of non-cash earnings. Significant insider selling in the last 3 months. Price to earnings, 25.6. That's a little bit high multiple-wise. currently showing overvalued, which I don't love that fundamentally. So that's why the only way I'd like to take a stab at SoFi would be if we're back down into these areas. So current price at $11. I mean, I could be wrong. We could have another leg higher, but I'd almost prefer that we get another kind of flush and dump, $8, $7, $6, and go in for the big double. Okay. Long-term calls. Right now, long-term calls, I'm looking at UNG and TLT. Those are my long-term calls. I think that's about it. The only other one might be URA for uranium. That's out to 2027. This stock has been just an absolute nightmare. I mean, this energy play, it's just right back where we started. So there's just a lot of volatility here. And that's it. So URA, UNG, TLT, those are my long calls that I have out for like 2027. So I'm trying to give myself plenty of time on that one. Walmart's down, got some shares. My puts are in some profit. My puts up about 200%. So it may be worth, let me look at Walmart here for a second. Walmart down to, this is a nice little correction on Walmart. I think we could go just a little bit lower on Walmart. Let's move this up towards like 80. Let's go $85 on this. So $80, $85, 200 EMA hit. So if that is the case, then my put that I have out to June, let's see here. Is it worth taking profit on this right now and reestablishing this trade? I'm up about 83% on my calls. Let me see what I can cover this for. So Walmart, if I get rid of the collar, which I took in a collar for 3.68 minus 49. I took in a collar trade for $3.19. So question. I do have a roll on this somewhere. Let me just double check my break evens. So Walmart. All right. I've got the 105 by 80 collar. 95.78 is my break even. Okay. So this is out to June. Let's see here. 50-cent debit on the put. 105. All right, I've got a break even around $90.88. $90.88 is my break even. So question is, if I wanted to play around with this collar position, I could take profit on the long put. I think a level here, if we flush just a tiny bit lower, it's another 4%. But I would like to see Walmart step up as far as defensives go. So I may just take profit on the put, see if this thing bounces. And I don't know if the 105 is going to get called away, but I will keep an eye on it, because if it starts to come back up here, then it's just going to gain in some value. So this expiration is out to June. So let me see. I pulled about 81% of the covered call credit now. If I close this down, I can close this out for an 83-cent credit. And so that is because my put collar, my put collar is worth more than my covered call. So I can still close this for 80 cents, lower my cost basis down to about $90, and then put on a new collar trade, which I think right now trading around 87.50. I would still want to put on a put and a call. Let me see what that looks like first before I consider getting rid of the collar trade that I'm currently in. So let me delete this. Let's go to a new trade. This trade's already out to June, which is 101 days. If I went out to August, if I sell the 105 still at $1.20, that's not too bad. But it's the put premium is going to be the problem now. If I sell a $100 strike and then I buy a 70, I can still lower the cost by another $1, get it called away, but then I'm dealing with this until August. So choices. I don't think I need to make this decision right now, but I'm going to talk about this more tomorrow. So Walmart, I put collar management on my to-do list. Okay, one trade I also might look at is with the VIX retreating a little bit today. It's not full on like flushing lower. This might be a little bit premature, but SVXY looking like a bit of a bargain. I'm just going to look at selling SVXY. I'm not sure what the margin or cost is, but I'm going to take a look at it. If I go out, let's say 45 days, and I sell a put, I'd be willing to own some shares of this instrument. This is around $40. That was when we had the August crash of last year, and the VIX spiked up to, 60, which is a level that we rarely ever see. So if I can sell like a $40 put, let me see if this one will trade for. I could do a 42, 41, and 40. So if I took on any shares, I'd own it at 41. I get some income if the price goes back up. Buying power, really. This must not be this is a portfolio margin account, and this is saying that I need $11,700 to take this trade. It's good income. But taking this buying power, owning 300 shares at $41, so it'd be 597 divided by 3 minus 41. I'd own shares at 39.01. That's not bad. So question is, if I'm out to April, sell some premium. PM accounts, I'm going to do this on these three right here. So 1, 2, 3, and 4 accounts. There's a bit more capital to work with. And see if I can get, if I get $6 on this, it's a pretty good income trade. And I'm willing to own some shares. Let me see if I get $6, $6.05. Maybe I don't need that much. Let me go buy, sell, sell. It's probably a little bit smarter and safer. That's only $3,800 of buying power. I'd still own shares. Plus it'd be, let's try this one. 50-cent profit trap. 40 would be the assignment. 50 cents lower, 39.50 minus the $1.95. That's a little bit better. This trade, 42, 1 and 40. Ivy rank is 55. I think it's okay. Volatility can spike up. This, I don't know. Probably not the safest thing to put in that much buying power for, although I do like the position itself. That seems like a lot of credit, which I'm okay with. And does this go higher than, the assignment price would be 42, 41, and 40. So if the VIX goes up, would I take, we'd have to have a pretty nasty crash. So let me just do this. This isn't awful. This one's a little bit better. Okay, so I get a $1.51. I want like the income side. I just don't want the buying power. It's so high in the buying power. Yeah, this is treated like a cash position. $41 would be $4,100 cash, and this is a PM account that's requiring $39.50 in buying power. So it's definitely on the expensive side. Debating. Not bad. I kind of like it. With the PM accounts, I think I could repair it. But if we have a crash, this thing's going to suck. So I'm going to hold off on it for right now, because if somehow this thing comes lower, there is no premium to really repair and sell covered calls. If I went out, 30 days and I sell an at the money covered call, I'm going to get about, $2 for it. like that's okay. But it's not really worth the buying power. I mean, I don't really trade on margin with this one. So it's just different. That's all. Anyway, I like it, but I don't. So I'll hold off. Let's see here. Still looking for $1.85. I am, yeah, $1.85 in IoT. So we're trading at 36 bucks, and we needed it to be below 39, right? That's what our. So I need it below $39. It's trading at 36. Let me see if that one got filled. I put that pending credit in today, and it still didn't fill. You got to be freaking kidding me, dude. All right, I'll try to close this thing out. $1.80 maybe before close today. Nope. $1.75. I mean, worst case is I can take the bid, which is ridiculous. I'm doing a spread here. I shouldn't have to take the bid price, but let's try $1.70. I hate taking lesser credit when it looks pretty good for full credit, but I'm going to work it down a little bit. $1.70 pending, no. $1.65 pending. This is ridiculous, dude. $1.60. Okay. I mean, all right, just got filled for $1.61. So it's closed. $1.61 it closed. IoT here. Close out everything for $1.60. All right, I'm going to update that trade. That is trade number 28 in my newsbreaker service. $1.61 credit. That's a 64.3% winner. So I'll make a quick update there. That was already posted this morning. I put a pending credit, but it just didn't fill. So this is Newsbreakers trade update. IoT entry 98 cents debit. Closed at $1.61 credit. I tried to close at $1.85, $1.80, $1.75, $1.70, etc. The trade was filled for $1.61 credit, taking the win, plus 64.3% return on risk. Not a bad trade. Okay, so IoT is done. Put in new trades today for, let's see what SE is trading for. SE is right in the frickin' middle. Bogus. This trade's going out the next week. We had earnings that went pretty much nowhere. So did I close this trade out? I thought I took a break even or better on SE. I did close this one out. I did. Never mind. It's already closed. Sorry. 245 minus 2.44. Okay, that was a break-even trade. Yep. So I have Adobe and DocuSign for new trades this week on Newsbreakers. Double up alerts. I took 2 trades in the SPY today. Waterfall income. We took. I've got 1 trade from yesterday, and I added in another trade from yesterday as well. Let's see here. There's Adobe. There's IoT. XSP 425. Oh, there it is. So there's my 310. Just updating the XSP. Sell the 558 put. Buy the 557 put. 36 cents credit. All right, so 2 trades added in. So we're slowly building on the grind, looking for a little relief rally. Took profit today on SPX. So that butterfly spread is worthless. So this one closed out at minus 55, and this one is a winner at 120. So net, we'll update that for the service here. Trade summary, so daily profit play. So trade 1. Broken Wing Butterfly, $1.20 credit. 0 debit. $1.20 net profit. Trade 2. $2.55 or $2.65. $2.65 credit. 2.15 debit for a 50-cent net profit. Trade 3. Butterfly spread. 55 debit. And it was a $0 credit. 55-cent loss. So net on the day per contract, $1.20, 55. Actually, $1.20 plus 50 minus 55, $1.15 net. Net credit for the day. Not bad. Okay, so that is 0. That one is 0. Okay, I'll take it. Let's see here. Meta, is there any future? Yeah, I mean, just look for a pullback. I said it's going to hit the 200 moving average. It's right there. So, again, Meta's a Mag 7. My only concern is that we go high, low, lower, high, lower, low. If we have a fresh low on Meta, then I'll gladly scoop up some positioning on Meta. Okay. The reason I'm not getting super gung-ho on Meta right now is outside of a defined risk bull call spread to maybe take a stab at the short term. In 2022, this stock was down 76%. I mean, the amount of volatility the stock can have, even if the index is down freaking 10%, this thing can be down 30, 40. It's like, I don't want to touch that type of volatility or own it. So, I mean, this is not the spot that I say long-term ownership. This is a spot that I would say it looks pretty good for a near-term bounce. But my concern is if this market is still trying to rotate away from Mag 7, I don't know why Meta is going to get a decent bounce. It could. I mean, this little 200 moving average could certainly offer a position, right? I mean, that's a nice little discount on a stock that does make a crap ton of money every quarter. But I'd rather see, if we have a flush lower, I'd love to see that opportunity for long-term positioning, and then we trade that to the asymmetry highs. So I'm just going to hang out. I mean, I had some trades up here. I had some ratio spreads down here. I've got some income trades down here. Like, everything's okay on Meta. I'm just staying out of the way. I'm going to see if price will fall. I drew this up yesterday. This low to this high, even if it just pulls back to a 23, 30, 38% zone, that looks reasonable for a bounce. A lot of times in stocks, we will see a 30% bounce that will come back and retest the high. So if you're looking for a short-term opportunity, that's not a bad play. Not a bad play at all. So something on Meta is not bad. Do you think MDLZ has more legs to run? I don't know. Looks like chop to me. How do you get MDLZ to run without having the stock market go higher? So, I mean, I think it's probably capped to this level. Looks like a range trade in my opinion. So if you're long on MDLZ, I would be protecting profits in these $70+ highs. Better be, better safe than sorry. Do you agree that before a real rebound, we need to see high correlation to the downside? I mean, that's what yesterday felt like. Yesterday felt like a bit of a pain trade. The entire market was down. 80% of the stock market was down. The advanced decline line was 80% down and 19% up. It was a brutal day yesterday. Today's a little bit different. We still end up finishing red on the day, but slightly, right? S&P is still down 0.8%. NASDAQ still down quarter, which is interesting. The NASDAQ outperformed a little bit today with probably some Mag 7 resiliency. But NASDAQ only down 0.24%. Dow worse than the S&P today at 1.13% red. IWM is flat, so IWM went nowhere today. So look, it's not done. VIX. It's not like we had some monster retreat on the VIX either. So I'm just bracing for, if the market doesn't like it, then the market gets VIX into the 30s. If the VIX goes into 30s, then I think there's more pain ahead. But I think that if we're interested in trying to find some type of short-term opportunity, even if the VIX is persistently higher, once we get into the 30s, we're probably going to see some type of reversion. Okay, so that's also why I'm going to revisit the SVXY trade, because if it goes a little bit higher on the VIX, I'll probably take that, what looks to be like a bargain position on SVXY. So, I mean, go back to your last real bear market would have been 2022, and we spiked up into the mid 30s. But once we hit those mid 30s, this is a reverting instrument, and we had a lot of volatility retraction, right? So if we are going to see persistent volatility, which has been from 15 up to 27, with highs up here towards 29, I'm not seeing like a big slam on the VIX, not yet. So if this is still grinding higher, we're not going to see that big reversion yet. But if tomorrow, for example, with CPI data, the market gets excited about something and the VIX just drops off a cliff, then we're going to start to see a really nice rip to the upside. And it wouldn't take long for the market to recover towards the levels I'm talking about. If the market can pull back into this area, percentage-wise, that's going to be a few percent rally. So is it possible that we go up this is a 3 to 4% recovery? It's not bad. Anything in the 580 to 590 space, it's maybe a 4 to 5% recovery. It's great. Having a flush down of 10%, recovering 4 or 5%, and then we'll see where the Bulls and Bears want to duke it out. Okay. All right. I'll let you go for today. Back at it tomorrow, 3 p.m. Eastern time for final hour. I appreciate y'all being here. Thanks. Like and subscribe, all that good stuff. Support the algorithm. Actually, help my algorithm by liking and subscribing. Your comments are great. I appreciate all the comments coming in on YouTube during the live chat. Craig, I see your question there for ABBV. It's had a good run. Again, if the market's going to lift off, this is healthcare. So, that's a big run though. I don't know. It's up 30% from these recent lows. It's good. Trailing stop losses. Got a bunch of mail that came in. That's weird. Okay. So, it's good. It's one of the few stocks that are performing well this year. I'd be cautious. If I looked at it right now, I don't want to touch it. This is sitting here at a high. I'm more interested if we have a pullback to resistance or a pullback into dynamic support, and look to see if we have higher lows and then try to position for that. If it blows the top off, then there's no way I'm going to chase it or touch it. But it's nice to see that this stock is actually up better than most. So, all right, I'll let you go. Have a good rest of the day. See you mañana. Bye.